we do see a deal happen and we actually see tensions de-escalate and we're kind of on our way out of this scenario, I think it's very likely that the markets will shift back to their focus on, I guess, the Fed, but maybe more importantly, the earnings season coming up. As we have a bit of a data-heavy week with jobs and inflation in focus, plus a little bit of a sigh of relief with tensions in Iran, at least for now. So we'll talk a little bit about where we stand with everything going on over there as well. To kick things off here this week, we definitely want to focus on some of the data heavy side of it. So we'll kind of start there and then we'll wrap up talking a little bit about what's going on over in Iran and what that could mean for markets ahead. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered each week as we kind of bring to you the market news, the data, the trends we're watching. And again, this week has quite a bit to cover, so I'm going to touch on some of the data pretty quickly, and then we'll kind of wrap up talking a little bit about what's going on with Iran. First thing I want to highlight is actually going back to last Friday. So last Friday, we had the employment report come out. This shows that we did add a surprise 178,000 jobs. This was pretty significantly higher than the number that was expected going into this. So this was really good to see. And it actually brought the unemployment rate down to 4.3%, which we got the Fed meeting minutes this week as well. So I'll talk a little bit about that, but maybe even more signs that the Fed may not necessarily cut. From the last press conference, it seemed pretty clear that they were really keeping an eye on that unemployment rate, maybe even more than prior, meeting and decisions in the past. And so this unemployment rate is important to watch. It ticked down slightly from 4.4, I believe, to 4.3, but nonetheless, a little stronger jobs number there. We did see unemployment tick down a little bit as a result. On Wednesday, so just yesterday, we also got the Fed meeting minutes, and the general takeaway is not a whole lot different than what we had kind of covered on the debrief from the meeting itself. But what we are seeing is maybe a growing, I guess, willingness to consider rate increases, believe it or not now. Yes, increases, not just cuts. So I don't want to make that sound as dramatic as it might seem on the surface. I would not suggest that the Fed, that's the base case for what the Fed is going to do. But there is a little bit more of a growing willingness, again, to look at that anyways. Again, I don't expect that necessarily, but it is something to keep an eye on because obviously the conversation has been cuts or not. Now we're talking about cuts or not, but also even talking about potentially what increases could look like down the road. So with that said, keep in mind, we may be in a bit of a good news, bad news situation now, although that's been the case anyways leading up to this, where if jobs is strong, if the market for the labor market is strong, the stock markets may not like it, because what that might signal is with a strong labor market, the Fed may be not only less likely to cut, but maybe even more likely to raise. So that's something to really keep an eye on. I would say that from our perspective, or I guess I should say, let me talk on the Fed first. What came out of the minutes was that the Fed is still leaning towards one cut likely this year. And they tied that primarily to the conflict in Iran and potential inflation impacts, especially with oil prices and how that all translates. I would say from our perspective, I think that we're still kind of on the side of this that we may not get any cuts this year. Although the odds are maybe a little bit more on a cut. I think that it's very possible we may not see any. And the labor market is the one that I want to watch really carefully to adjust that as the year goes on. But if the labor market remains relatively strong and then inflation remains, at least in check, if not higher, I think that, that may suggest that a rate cut may not be that likely. We also had some personal income spending and inflation numbers come out. So we had income come out at down 0.1%. We had spending come up 0.5%. And then we had some inflation numbers around PCE data. So both the headline and the core PCE numbers were up 0.4%. Both of those were right in line with expectations, in case you were curious how what was expected going into it. So all that translates obviously very well into what to watch for here in the Fed. Be sure to tune in next week before we talk a little about where we stand with Iran. There are a couple inflation data points coming out next week that we're going to make sure to cover. One is consumer price index, the other is producer price index. So we'll make sure to keep you up to date on those numbers. But before we break for the weekend, there is obviously some news around the tensions in Iran, and what it seems like is that we have at least a path maybe to peace, but for now. So we're going to need to keep a very close eye on this. but that seems to be the most recent version of where we stand. Just remember, though, a lot can change in these coming weeks. So I would not write home about this. I would not suggest that this means we are out of the woodwork by any means, but at least there seems to be some progress here. And I think over the coming weeks, it's going to be important to watch this really closely. If we do see a deal happen and we actually see tensions de-escalate and we're kind of on our way out of this scenario, I think it's very likely that the markets will shift back to their focus on, I guess, the Fed, but maybe more importantly, the earnings season coming up as well, as we kind of get into that here in April. So we'll continue to keep an eye on it. There is a path for now. Now, whether or not that changes, that's the key factor here. We'll be sure to keep an eye on it. But if that path does continue to go, if we continue to go down that path, and we do see the tensions continue to de-escalate and things get back to normal, again, I think then the markets get back to the fundamentals and keeping an eye on earnings season coming up. So we'll continue to keep you posted on that. And if things do not go as planned and we do still have some challenges in getting to a deal, obviously the markets will remain focused on the tensions in Iran and especially how oil prices may impact markets there moving forward. So hopefully that's helpful. Again, big thing to watch, so we'll continue to keep an eye on this for you. Be sure to tune in next week. We'll be back next Thursday at 3. In the meantime, have a great upcoming weekend. And for the golfers out there, enjoy the Masters throughout the weekend. We'll see you next Thursday at 3.